Hello, and welcome to the Soup Room. You're probably wondering, why will I share this information with the world? Why should I share this information? The simple question has a simple answer. The answer being, everybody on this planet deserves access to the same amount of knowledge as everybody else. I am not more important than anyone else. I am not more important than you. I do not deserve anything more than you deserve. And the only entity that has more and that deserves more is God Himself. Without boring you guys, let's get right into it. So today, I'll be introducing a secret candle trading model like no other. If I were you, I would get ready to roll up your sleeves and learn about an unknown secret trading model based solely on the algorithm of time. Most traders base their trades and setups off of price. We will be focusing on time. This is the 9 a.m. CR model. CR standing for candle range. Introduction. I'll begin by giving you guys an introduction to what is the Soup Room. I'll then share touch upon the basics of turtle soup. And then finally, what you guys have come for, I will share my secret model that I've never seen anybody else in the entire industry. In my entire 5 years of trading, I have never came across anyone who has seen this model, and I haven't come across anyone who can beat this model. So, what is the Soup Room? I'm sure, as you guys can see, it is a YouTube channel. I will be sharing knowledge around the topic of turtle soup. I will be sharing my personal model, which is the 9 a.m. CR model, based around turtle soup. The whole point of the Soup Room is to be able to share information freely, without any fees, without any price tags attached. See, knowledge does not need to be paid for. Knowledge and wisdom should be free. When you make it to a certain level, you realize, should I really be implying to the people around me or the people below me, financially speaking, should they deserve to pay for the knowledge that you have learned and obtained? No. The answer simply comes down to morals. God gave you a chance to grasp the knowledge. Since you understand it, you now have the free will, free choice to disperse it and teach it to others and help them out help their families out. Not by way of charity, but by way of giving, by way of granting, by way of gifting. Gifting what? Knowledge and wisdom. For what? For free. That in itself is the soup room. The basics of turtle soup. So, what is turtle soup? Turtle soup is rarely touched upon in the trading community, and for good reason. Because it works. You see, turtle soup is all about understanding the highs and the lows. People keep focusing on patterns and all this other nonsense, harmonic waves, indicators, all garbage. Turtle soup is formulated around false breakouts. For example, this right here is a breakout, false breakout. To other traders that don't know anything about turtle soup, they would have been bearish. Turtle soup traders know to be bullish. I will explain why later. In order to succeed with turtle soup, you must forget everything you were previously taught on how the markets function. Forget about those patterns. Forget about the indicators. Forget about your harmonic waves. Forget about all that garbage. The only thing you will need from now on is turtle soup. Study it and focus. Turtle soup is the missing link to the chain that you have been trying to put together your entire trading career. Yes, this is true. How to learn turtle soup or the 9 a.m. CR model. Like I said before, throw out any previous knowledge of the markets that you may have hidden or locked away inside of your brain. Have a clean, free, and sound mind or headspace when learning turtle soup. This means stick to one or two mentors only, whether it be me, whether it be ICT, whether it be Trader Day, whoever it may be, stick to one or two only. 3. Forget the patterns and all of those indicators. We work strictly with time and price. What does that mean? Turtle soup is based around highs and lows. That is price. Turtle soup works and functions on time. That is why time is written before price. A deeper dive into turtle soup. Turtle soup involves identifying false breakouts or breakdowns, where the market deliberately moves past a previous high or low before reversing. An example of this would be right here. Price deliberately moves past a previous low before reversing up. This was not by accident. This was at a specific time of day. This manipulation is aimed at triggering the stop losses and enticing new positions, which the market then moves against. So, an example of this would be right here. Price broke below this low. We then broke below this low. Whoever was long was stopped out. Now, whoever wanted to enter short because we broke structure, you can imagine I am waving my fingers in the air, quoting. This is a false break of structure. People are entering short. That's the second batch of traders that will get stopped out. And we ultimately reverse up. Like I said, this manipulation is aimed at triggering stop losses and enticing new positions, which the market then moves against. Manipulation down, stop hunt for who? For everyone long, breaking structure, entice new positions to go short, stop them all out. Note the importance of repetition. Note the importance of repetition and observation is stressed for mastering the turtle soup strategy. The more you backtest, the more you study, the more you tape read, the more experience you have, and the better you will be able to see turtle soups. Here's an example. We created a range low, range high, turtle soup. Where are we heading? Opposing end of the range. Turtle soup when? At a specific time of day. You guys will realize how much I emphasize on time. Why? Because that is the key to succeeding with turtle soup. Who did we stop out? Everybody who was long was stopped out. Enticing new positions for what? To go short. And then reversing back up, stopping those shorts out. So we stopped out two types of players, longs and shorts, before reversing to the opposing end of the range. Here's a look on the shorter time frame. On the higher time frame, you can see the key level with the opposing end of the range. On the lower time frame, we turtle souped and we hit a key level. The key to turtle soup is understanding high time frame key levels with time in mind. A turtle soup will not just work because it tapped a high or tapped a low. A high probability turtle soup will always form after tapping a key level. Meaning what? Two lows must be taken out before reversal. Low time frame turtle soup, high time frame key level. Target opposing end of range. How do you enter? As soon as we turtle soup the low, we want to look for, if we're bullish, we want to look for our bullish order block, which is the last down close candle in the purge of liquidity. or the rejection of liquidity, or the support of liquidity, or the sweep of liquidity, whatever you want to call it. The last down close candle, measuring from high to low, is your order block. The highest probability order blocks will always be thick down close candles or thick up close candles when you're bearish. As soon as we close above this order block, we now know that it will be respected. Why? Because it is the change in state of delivery. Lower time frame, turtle soup, order block, thick down close candle, tapped into, respected, and we trend up. Above every old high, there is buy stops. Below every old low, there is sell stops. What does that mean? That means above every single high, there's going to be people getting stopped out, and below every single low, there's going to be people getting stopped out. Are you guys starting to see why turtle soup works? Why we look at highs and lows? And why the market is not random? This is an example of a fake market structure shift. As soon as we close, or as ICT says, a wick is all you need. As soon as we wick above, people are bullish. You enter targeting the opposing end of the range, which is somewhere above here. What happens? We end up souping a high and reversing lower. This is what the average ICT trader sees. This turtle soup is what I see. So turtle soup equals a false breakout. There are a few rules for trading turtle soup with a high success rate. Number 1, buy low, sell high. Or never sell below a low and never buy above a high. We are not breakout traders or breakdown traders. We trade at the extremes of ranges. We don't trade in the middle of a range. This is why turtle soup has insane risk to reward. Understand the different market profiles. I will go deeper into this in part 2. For now, I'll leave you with trend, range. The only 2 market profiles. Number 3, understand the different entry models. Right here is one of them. This is the order block entry. Not just the order block. There are a few other confirmations that you must be looking for in order to enter. Always monitor the high time frame price action. Without monitoring the high time frame price action, you will never notice high time frame key levels, which is the key factor to succeeding with turtle soup. High time frame fair value gaps are the reason why low time frame fair value gaps remain unfilled. Always manage your risk. If you don't have a good sense of management when it comes to risk, you will lose, and you will lose. Risk management is very important when it comes to turtle soup or any trading model for that matter. Backtest and study this. Go into your charts and look for this formation. A high, a low, break the high, retrace back down, expansion. What just happened? We created a low, we created a high, we broke that low, coming back through the low again, so this in itself is the rejection, and we broke the high with displacement. So we rejected lows and broke a high. Bullish. Entry off the breaker. Entry off the breaker. Then going long to where? The 50% or opposing end of the range. Now, what you've all came here for. The 9 a.m. CR model. After years of refinement, I'm finally ready to share this trading model with you, with the world, specifically those who search for it, for absolutely free. Don't take this for granted. I've personally spent well over 3,500 hours backtesting and front testing the model. I'm not hiding it anymore. It's not staying a secret. To my duty, I must reveal it. It is time to uncover this gem. The magic of the 9 a.m. candle range model. Go ahead and study this image. So what is CR? CR stands for a candle range. Every single candle is a range, a timed range, depending on whatever time frame you're on. That in itself is the specific timed range that you will be looking for. If you are on a 1 hour chart, you are looking for a specific 1 hour range. If you are on a 4 hour chart, you are looking for a specific 4 hour range. If you are on a daily chart, you are looking for a specific daily range. That's Monday's candle. 2. The 9 a.m. CR is based off a timed range. Like I said before, specifically 9 a.m. Every 9 a.m. we will have the exact same setup, exactly alike. There are two possibilities, both of which will be very visible once they occur. Two possibilities and only two. Let me repeat. There are only two possibilities, two ways that price can move. And only two. And yes, they are very, very visible, very easy to catch. Once you can find the highest probable range that forms during a trading day. $369. the algorithm of time. The 9 a.m. CR model is based around 9. You can formulate a model around 3, around 6. You can formulate models around the squares of 3, the squares of 6, the squares of 9. But the highest probability setup will always be at 9. 3 and 6 are very valid, and I have used them in the past. However, there is a reason I use 9. So that's the end of today's presentation. Part 2 will be releasing soon. Go ahead and backtest, study what you've learned so far. Try to find the turtle soups in your own charts. It works on any asset. With that being said, good luck traders. Keep printing.